All right, great. So thank you again for coming. I know it's very far from wherever you are, and I mean Wyoming, Cheyenne, very far from everything. It's kind of like a frontier of the frontier. So really appreciate your coming. And so like let's just kind of kick it off with what is that you are interested about Urbit, and what specifically should investors be interested in for Urbit?
Should we do like a little intro of like
that first? I'm so sorry. Yes, please.
Yeah, I can do a quick intro. My name is Evan, like we said. I got into crypto 2014, 2015 through more of a crypto philosophy red pill, to call it. I was also a finance nerd at the time, so I held very contradictory ideas in my head. Like I grew up trading options in the back of math class in high school. I started my career very traditionally on Wall Street. I was at Goldman Sachs out of undergrad, and then joined a large venture capital firm called Insight Partners. They manage about 90 billion today, probably the largest global venture fund. I then built the crypto practice for them and then launched a spin-out fund called Portal Ventures. I got into Urbit in 2020. I'd say I spent about 2 years trying to understand what it was, finally understand what it was, and then started investing across the ecosystem from the fund.
my name is Jake Brukhman. I'm the founder and CEO of CoinFund, which is one of the earlier crypto fund brands. We launched in 2015. We kind of, well, I got my first Bitcoin in 2011. I sort of watched the whole crypto industry form from a single blockchain. Mined some of the first blocks on Ethereum in 2015, and became an Urbit investor in 2016 at the very first digital asset sale that they did. I'm a technologist. I spent about 10 years in traditional, mostly fintech. I was also a technical product manager at Amazon. My mom and dad were both engineers, learned how to code when I was 14. So I'm definitely like on the technical investing side of that space. And so we're excited to watch Urbit kind of start to go to market these last couple of years, and have been really involved and getting more involved with the community over the last couple of years.
I'm so sorry about missing the introduction. It clearly tells me
this is an investor panel, guys.
I clearly have no business running a panel, but thank you very much for understanding my shortcomings there. Now, so what about Urbit excites you as an investor? So why don't we start with
Yeah, I think I spend a lot of time thinking about what are the actual 0 to 1s that are being built right now. And I spend obviously a lot of my time in crypto, and you look around and you're like, oh, another solution in MEV or another Ethereum competitor. And to me, Urbit is a proper 0 to 1. It's like, as Bitcoin and Ethereum and blockchains did to programmable value, Urbit does to programmable and composable computers and data and applications, and happens to do that in a way which is super complementary with crypto. And so to me, like, I properly see something that's of the equivalent potential as Ethereum. I also, if we run with that kind of analogy, I look at Urbit and I say it's having its MetaMask moment right now, which is to say in 2015, like, Ethereum was kind of shitty to use. You had to command line in. You really just couldn't use it. And then all of a sudden, MetaMask comes along in 2016. You say, wow, I can now get onto the network in under 5 minutes. And that's happened with hosting solutions on Urbit over the last year, realistically. And then you start this infrastructure application cycle. And so infrastructure will keep getting better. New applications will be built. Infrastructure will run into challenges again. It'll get better. New applications will be built, and repeat. And so that's what excites me here. But TLDR is it's a 0 to 1 opportunity to me that's of the scale and importance of Ethereum.
what about Jake?
When we saw Urbit for the first time in 2016, we were just kind of like, this is definitely a like, let's fund this to see if this can even be built. But I think over time that view has evolved, and I think what Urbit has gotten really right is just sort of a bunch of values that are Web3 values, right? And some of that is like, or a big one of that is kind of self-sovereign data and how applications should work when your data is self-sovereign and apps are more like kind of stateless functions of your data. And so what I'm trying to say is that over time, it has become more obvious that like Web3 has come to market a little bit as a concept, and it's really only happened in the last couple of years that even the words Web3 are in kind of general circulation. And urbit has been kind of converging with Web3 in a way. And I would argue that like urbit is one of the purest implementations of Web3. When you say like, oh, I have self-sovereign data on Ethereum, you know, your data is actually very much somewhere else, and you have cryptographic ownership of it. But with urbit, you have the option to not only have kind of cryptographic ownership over your data, but also physical custody. You know, and so the way that I look at urbit is at a very high level. It's, you know, it's a decentralization technology that provides something that blockchains don't. Blockchains provide like a very strong global consensus, but you don't need strong global consensus for most kind of more local applications. And you could build a weaker form, which is more efficient, of consensus using urbit's primitives. And then the other view is that it is like kind of an aggregation layer for Web3. Like I imagine urbit will be very, very useful when it's very integrated with all manner of decentralization technologies, from blockchains that are financializing it to decentralized storage networks that are making it more persistent, you know, and so on and so forth. And so I really see urbit as kind of a usability technology for Web3 in a way, and it has this huge opportunity to, you know, express that and come to market with Web3 as that's happening in real time.
Right. So, you know, both of you are very, you know, forward-thinking, tech-savvy investors. And for me, as a technologist, the big selling point for Urbit is deterministic computing. But that's not, you know, very easy to explain to investors out there and the venture capital folks out there. What should they be interested in? Like, what should they be interested in Urbit?
The way I describe it, and I've actually gotten my Urbit pitch down to under 2 minutes in terms of like the speed at which I can quote red pill someone. And it usually goes as follows. You alluded to it. It's like blockchains are really valuable because they solve double spend through global consensus. And that matters when you're dealing with value. But a lot of the internet is not value. Like, to me, transaction fees on a Twitter would be a like bug, not a feature. And so then a lot of the internet actually requires local consensus. It's like everyone in this room needs to agree on what's happening in this room, but the world doesn't need to agree. And so then the analogy I draw is like, it's kind of like you're driving an inefficient vehicle all of a sudden. It's like taking a tank to bring your family to soccer practice. Like, you don't need military protection for just an internet application. And that's how I describe it. It's like, what's possible here, what is supposed to live on Urbit, et cetera. And then you can get into details where the determinism is really important for executing that. But the reality is, like, Urbit's just a layer one for internet applications, and that's what most resonates with people.
That's a much better way to explain it than the way I explain it to other people. So that's awesome. Yeah, Jake, what do you think?
Yeah. So your question is again. Sorry, can you repeat your question?
Yes, absolutely. So for investors and VCs who are not like as like with it as you are, or like you know, as smart or whatever, what should they be excited about?
Well, VCs have a kind of limitation, a cognitive limitation, which is that they want to find opportunities that just create like really outsized returns. So like the typical scenario of a VC portfolio is, you know, you get 25 to 30 companies, like 28 of them like go out of business, one gets sold, and one returns the whole fund. And so, you know, the limitation of VC capital is that every opportunity in the fund has to have a path to returning that fund. That distribution is actually not as true in crypto. In crypto, you have more digital assets, and it's less that assets are, they either go to 0 or 1. And so I think crypto portfolios tend to have like more successes, right? Because you have 0.5 outcomes. But in this classical kind of VC model, I think Urbit is really interesting because we can take like an operating system view of it, right? It's a computer, it's an operating system, it's a programming environment, it's a tool that, if its advantages are sort of adopted, and when I say adopted, I don't even really mean like globally adopted by everyone. It could have kind of business adoption. It could have, it just needs to be significant. The value that could be accrued in the network will absolutely create a venture-style return. So it's an attractive kind of digital asset for that. And it could, in the success scenario, be like really, really big. So that's kind of a dumb way, VC hat sort of way of looking at it.
I think that's a great explanation for everybody. So we have reasonably good outreach, but yeah, that's sort of like, I think we have to start from notion that, okay, what's in it for me, kind of like answer first for everybody, and then how the user is going to use it, and then like what is the total market, and how can we capture it, all that stuff. So kind of moving on to, in that route, in that spirit of things, you've been to many Urbit events. Both of you have been to many Urbit events, and kind of you have a depth and breadth of sort of like the vibe of it. What can be improved to from hosting events like this or anywhere else? Like, what can be improved to get the messaging straight and get more people involved and more developers and so on and so forth?
Yeah, something that is like really seeing the cross section of so many different communities across crypto and projects and even companies and traditional software and internet. Like, hands down, I can say Urbit has the most special community out there. Like, the energy in Urbit is really unique. And that's a superpower, but it also, I think, comes at like a cost of you need to still then market it and go to market. And it's like, adoption goes through waves of, at first it can maybe seem kind of like this really tight-knit, almost cult-like community, but then that's not what drives global adoption. Like, it's now at the stage where, okay, how do you take everything that's been built and start telling the world about it and translating it and actually like creating a go-to-market, getting net new people onto the platform, finding ways to build new types of applications, financializing it in interesting ways. And so I think like Urbit is, in terms of what's been built with the resources available, it's 1 to 2 standard deviations above the typical crypto project. In terms of how it's been like marketed though, and the effort and capital that's gone into go to market, it's definitely a standard deviation below. And so once you start to normalize that, like really interesting things happen, and you start to actually reap the benefit of everything that's been built so far. And that then creates a flywheel of getting more capital into the ecosystem, back to the VC question. And capital makes it a lot easier to build, because if you look at everything that's been built with like limited capital resources over the last however many years, you can just ask the question of like, what happens if you increase that by an order of magnitude? And the pace ends up being really exciting, I think. So it's the go-to-market.
Right.
I basically think it's 3 things. I think it's kind of core tech. I mean, like, there's some things about Urbit that have solved problems like very well, and there's other things that like don't work as well. And I think from a tech perspective, it's important to be realistic about what has worked and what has not, and iterate toward kind of a functional system. I think we're in an MVP sense, we're like there. We have this network and it's functioning, but there's a lot of like optimization to do, as everyone knows. Number 2 is, ultimately, people come to a platform to do something useful. I always like give the example of like ChatGPT, which famously was one of the fastest adopted products of all time. And ChatGPT has these interesting properties. You could explain it in like a second. You could try it in a second, and everybody wants to try it. It has this like killer app, sort of like, wow, I've never used AI before. I just want to try it out, right? And so that's what like a killer app could be like. Maybe there's other ways of building killer apps, but that's a compelling one. And Urbit needs apps where people are like, I have to go and try that. and get into the ecosystem. And the third one is like what you're, I think, referring to, Evan, which is how do we talk about it? Like, how do we go to market? How do we get the right messages to the right audiences as we expand? The core community of Urbit, and by the way, let me digress here for 1 second. I've seen many kind of blockchain ecosystems come to market. I've seen Ethereum kind of grow from an idea. I've seen Tezos, which has been going to market for like 10 years. I've seen Near go to market 3 times. And some of these companies have raised $200 million or $300 million or like $1 billion, like in EOS's case, $3 billion, right, to go to market. And what is so amazing about Urbit is that the community is just totally organic, right? Like this is the advantage that Ethereum has, where like there was nobody who ever spent marketing dollars on getting people to adopt Ethereum. It happened naturally. And this is the same, I think, strength that Urbit has. But as we expand, we need to find like other language and other ways of presenting the value propositions here so that the broader world can just use it.
Right, exactly. So basically, one part of it is keep the community ongoing. I mean, we have a very low developer attrition. I mean, like people who've been writing Hoon are still writing Hoon, so that's excellent. And like to both of your points, we also, but then needs to like bring in business users and bring in retail users, bring in gamers and all that stuff, right? So yeah, I wholeheartedly agree. So maybe kind of pinning this more to like specifics. So what would you like to see like next 1 to 2 years, whether it's technical or community or anything, Urbit community could muster, like what would you like to see next 1 to 2 years?
I'd go back to the Ethereum analogy. It's like, if we're now at a point where we're seeing, okay, people can get onto the network in sub 5 minutes, what comes next in Ethereum's curve? Well, hopefully we can skip ICOs. Let's skip that, but then it's like DeFi happens. And I think before DeFi happened, everyone looked at Ethereum and they were like, great, we can launch tokens and like create fake businesses, and this is great, but it's not going to be a real thing. It's not going to power anything interesting. Like Ethereum was not a set innovation and a set network until after DeFi, realistically. And so a lot of people were surfing, like I like to use this analogy of when you're finding product market fit, you have like this surface and you have a crack somewhere in that surface, but you can't see it because you're wearing a blindfold. And you're using a screwdriver and you're just going around and you're trying to figure out where that crack is. And then eventually you find it and you just pound the screwdriver into it and unlock it. And so that's what DeFi was for Ethereum. And now there are net new use cases on it. But to me, like that crack in the Urbit design space has yet to properly been found. And so my hope is certainly like in the next 12 to 18 months, it's found that creates net new primitives. Like Uniswap was really a like net new idea and a net new primitive in terms of how they executed on it. And then lots of copycats form and lots of values created in it. It creates an industry. It's like that's the opportunity that's in front of us. The interesting question is, what will it look like? Because I don't think it looks identical to what's happened in crypto. I don't think it looks identical to what's happened in like quote Web 2. I do think it has elements of it. Like it needs to be a product that's easy to use. It also needs to be a product that's probably like leveraging some interesting financialization. It needs to be a product that lets people do things they can't do elsewhere. But there needs to be this focus on like, why do people want to use this outside of the fact that it's an easy way to access and use Urbit? But that's high level what I think needs to happen and will happen.
Right. What about you, Jake?
So I think that the short answer is, in the next 1 or 2 years, the most critical thing that has to come to Urbit, in my perspective, is financialization. So meaning like bringing some form of blockchain consensus and smart contracting to Urbit so that people can create digital assets and those things can start trading on markets. And the reason for that is that like as a community without that today, Urbit has challenges in maturing. Like a mature ecosystem looks like a lot of very experienced founders building apps and a lot of institutional investors supporting them in kind of adding capital into the ecosystem. And today, Urbit is mostly like founders on Urbit mostly have this like traditional model of selling equity, which there's nothing wrong with that. But because we're a crypto adjacent sort of network, we see a stark contrast with how like Ethereum came to market. And so I would posit like just the addition of being able to launch digital assets, smart contracts, and tokens on Urbit would, first of all, increase the founder sophistication. It would attract new founders just automatically. And by osmosis, it would attract more institutional investors. And that it's a flywheel, right? The more you have of those things, the more they grow, and the more the ecosystem grows, and the more apps there are, and the more people are starting to use those apps, and then identifying the killer apps. And I understand why sort of we are where we are today, but the design space is right here for us to claim if we want it.
Yeah, absolutely. I think like without that sort of like end rail of like financialization, it's going to be difficult to bring new money in, and so sort of like Linux is great, but there's there's no end rail for that. You can build a great business on it, but it itself as a operating system is not something that you can. It's a lot more abstract, right? So yeah, absolutely.
Yeah, I would add to that, which is it's always a question of with all forms of innovations throughout history, they have to find an interesting way to tap into capital markets to accumulate the resources to build the innovation. Like you see that when you go back to railroads, you see that when you go as recent as internet companies, and now you see that with crypto protocols. Like there's just something that happens in the capital markets whereby people learn how to tap into it to lower their cost of capital. And like now I'm going into absolute finance lingo. But like if you lower the cost of capital, i.e. increase the amount of capital you can raise, it becomes a lot easier to build really innovative things. And so in many ways, one thing that excites me so much about Urbit is like I look at how much has been done while playing on hard mode. It's really impressive how much has been done with how little resources have been available here. And it's like, why does it need to happen on hard mode? There's a design space to play in to make it happen on easy mode. And then like I think like if you put Urbit devs in the Urbit community, in the Urbit ecosystem, and the Urbit tech stack up against other layer ones in crypto, call it 80% of them, and you give them equivalent capital, like it's night and day in terms of what will be done.
Yeah, I mean, absolutely. We have the best, folks here, technical mindsets, and it's how do we then turn that technical dividend into something that everybody else can build on top of it, right? And bring more and allow core work to be continued and so on and so forth. But yeah, it's a hard problem. So hopefully, with everybody's help here and with your help, we'll be able to communicate this a little better. Someone that we all know, Tim Luck, I think made a really good point that it's the total developers locked, not in a coercive way, but developers who are willing to work on this for a very long time, and like folks, everyone here that's been willing to work for a very long time for very little resource. I mean, they're doing it and they're throwing passions in it, but let's make it easy. Like you said, let's make it easy.
Totally, and that also drives like net new developers to the space.
Yeah, 100%. So like there are tremendous talent here, and there are new businesses popping up. I mean, there are some like really great apps that look incredible. Some Holium, Portal, you name it. Everybody that's developing app. So beyond tools and user space apps that are like now trying to reach out to the public and clients, and so on and so forth. What can Urbit community, or just even individually, can we do better in terms of like marketing or PR to get more people excited about Urbit?
I think it's two things. Number one is appropriately translating Urbit. Like I see this a lot with I obviously I spend most of my time in crypto, and a lot of my like investor base for the fund is more traditional finance. So think like Wall Street exec types. And there I'm playing a game of translation. It's like, how do I put something like Ethereum into the language of a Wall Street exec or a tech investor? And by doing that, you unlock like it clicks with their mental model. You've translated it, and you unlock capital. Now, Urbit runs into an interesting problem where like it actually needs to translate from Urbit to crypto, and then Urbit to the rest of the world. But so number one is figuring out like what are the mental models that really resonate and do translate. And I think there are actually really simple narratives and stories that can be constructed here. The tech is super complicated, but that doesn't need to be actually delved into when explaining what it is. I.e., you could just say Urbit is like the home for apps with local consensus. Blockchains are the home for apps with global consensus. And that resonates with blockchain people. But the first is translating. The second is then just getting out there more, like actually playing the go-to-market game and the marketing game. It's like people aren't going to learn about Urbit just by like going to Reassembly and Assembly. They're going to learn about it by reading blog posts, by joining Twitter Spaces, by like hearing people talk at broader crypto conferences, by getting on podcasts. And so that's the action of evangelizing.
Yeah, I'm guilty of not evangelizing enough. I've kind of withdrew from Twitter, but what I should be doing is talk a lot about like why I love it, why I love using it, what do I use it for. What about you, Jake?
I think Urbit is a very, as you guys know, technical community, and the bias of technical communities is that technology is the most important thing. And I appreciate that as a technologist, but I also have been an investor for about 10 years, and I've come to appreciate that like we're all here, or a lot of us are here to build commercial enterprises, to build businesses, and to have big financial outcomes. And the way that is done is actually it's actually through being generalist. It's not through just being technology focused. And what I mean by that is like I run into a lot of, let's say, like young founders sometimes who say like, I'm going to build the tech, then I'm going to build kind of the go-to-market, and then I'm going to go to market. And the reality is that the way that you build commercial enterprises is that you have to do all of those things on the first day. You have to have a great tech team. You have to have a person who's starting to strategize how you take your product to market. You have to start developing language on that first day, like for your audience and for the target audience that you're going to be going to market to. And all those processes have to work kind of in parallel, even before your product is launched. And like, there's some projects in crypto that have not done this also, like Ethereum, right? Ethereum is a project that has no kind of central control, and everything has been done organically. But there are projects that have demonstrated just like incredible discipline and maturity in this area. And that's what I would say, like, if you're a founder in this ecosystem, you should think about that. You should engage investors like us. Like, we're just here we're happy to talk to anybody and sort of give you some of our experiences. And that's ultimately how Urbit, as a ecosystem of products, will come, I think, to success.
Yeah, and I guess I'd add to that as well. It's like, even for some founders, if the goal is to actually build the interesting product, like back to the game of playing on hard mode or easy mode, it's a lot easier to build the product when you're building something that is investable all of a sudden, because then you're playing with real capital, which lets you get real talent and actually like create and manifest what it is that you want to build.
So I know this is sacrilegious, but I will ask one last question for both of you. outside of urbit, that's why I'm being very careful here. Outside of urbit, what excites you? Start.
In crypto specifically, or in the
No,
world?
it's just in general.
Oh, this is a rabbit hole. I'm obsessed with this idea of programmatic consciousness, which is to say, like, there's a lot of research right now around, what is consciousness, and like, does it live on some alternate dimension? And like, Qualia Research Institute is doing a lot of work here. There's a guy who co-founded it named Mike Johnson, who's also urbit adjacent. But the idea, and I'll keep this very brief. The idea of where I think we're going is, I think in our lifetime, we're going to actually understand how consciousness manifests into the brain. And so, like, be able to look at something and say, oh, this is a state where you're happy, or where you're present, or like other things, and you can see what those wave patterns look like. And then once you understand it, the next step is to say, okay, how do you actually change it? And so I think we'll have these devices at some point in our lifetime where, like, I can program myself into different states of consciousness. So I recently angel invested in a company doing this for lucid dreaming. And the idea is to create a headset that on demand puts you into a state of lucid dreaming.
Wow. All right.
I'll just tell you kind of like what I've been working on this year in my capacity as an early stage investor in a coin fund, and that is the intersection of AI and Web3, which is a very interesting area, and it's all about democratizing the pipeline that creates AI models. That pipeline consists of data and talent and compute and kind of commercialization and productization, and that whole pipeline today is owned by 5, 6, 7 big tech companies. And I think you could bring kind of like AI to Web3, or you can bring Web3 to AI. And I think the latter is much more interesting, because when you bring Web3 to AI, what you're doing is you're creating basically like networks that democratize access to those things. If you look at the OpenAI roadmap, almost everything on that roadmap is bottlenecked by the availability of GPUs. And GPUs are owned, again, by NVIDIA and Microsoft. And I think Web3 decentralized networks will democratize access. There's a broader view in AI that open source has been the source of more innovation, like this year even, than proprietary AI. And I think Web3 will enable that in a huge way. So that's one area. If you want to take a look at some of the companies that we've invested in, Jensen AI works on decentralized training of models, and GizaTech.xyz works on bringing model outputs into smart contracts, so you can use AI trustlessly. And then some of the other areas I've worked on is zero knowledge, because interestingly, the availability of AI on chain is sort of bottlenecked by zero knowledge proofs, kind of the best technology today for off-chain computation. And then beyond that, worked in some blockchain interoperability protocols, scalability, like layer 2, and NFT financialization. So that's kind of, for example, bringing pricing, which again is created by AI, to price individual NFTs and increase the liquidity of those markets.
This has been very illuminating. I wish that this were a little longer so we could talk about a lot of things like NFTs, art, and all kinds of stuff. And hopefully if we extend the invitation, you'll join us again next year. And it'll be an even bigger event, and it'll be even more exciting. So thanks everyone. Thank you. Thank you, Jake. Thank you, Evan.
Thanks.
So I'd like to ask the panel, what do you think of the viability and the attractiveness to capital of a urbit database company? And specifically, as an example, think of Larry Ellison in 1979 in Oracle.
Well, I can only speak kind of for our portfolio, and I would say that sounds like a software as a service, which we're sort of less experienced in. We tend to work with decentralized protocols.
I think it's then like a question of what the go-to-market looks like. I'll be a broken record on this one, but like who ends up using it, how you're using it, how you're pricing it, and then are there interesting ways to deliver the product as, like again, as a protocol, as opposed to as a SaaS business. Because what I build the fund on my side is this idea that protocols are the next generation business model, which is to say as software did to services businesses over the last few decades, in that they were hyper scalable, they were capital efficient, they delivered new products. Protocols will do to software over the coming few decades. And that's to say they scale faster, they're more capital efficient, and they unlock new products. And so it's like there's an insight there, and then it's a question of how that insight is executed on in terms of how you can make that like venture backable.
But that's also a bias, I think, that we
That's
have
right.
as crypto investors, and not every investor would have that bias.
Agreed.
Do the Wall Street investors that you market to, do they ask you questions about what are the intellectual property rights for the digital assets, the crypto assets that you're marketing to them? Foreign cryptocurrencies foreign to me, and if I were to invest in something, crypto assets, that'd be probably the first question I would ask you.
They don't. And to this, I point to, I by no means was in the room for this conversation, but there's a conversation that I like to refer to, which I heard about through, I think it was a book, where Bill Gates walked into Apple's offices way back when and said, like, we're going to start monetizing software. We're going to start charging for software. Everyone was like, that's absurd. People are just going to copy your software and prices are going to go to zero. There's no world in which you can charge for software. Hardware is where the money is. And to me, it's like, okay, yeah, there aren't IP rights, obviously, on open source software or on digital assets, but there are other moats that form and other things that create switching costs, and it's through that ultimately value can be captured. And so I just think it's a net new kind of like Porter's 5 forces, if we dare.
I think Evan answered it pretty well. But I think the short answer is most, not all, but most projects in the crypto world are very open. And one of the reasons is that they're trying to make public networks, public good networks. So they necessarily have to be open. But again, to Evan's point, they've found ways of capturing value despite being open. And those are having like an asset that trades on secondary markets that captures the value of that particular network or its fundamental activity. So it's just a different model. It's a digitally native model.
We'll take one more question.
Over here. I already have the mic.
Sorry.
More questions.
Yeah, maybe some of this just boils down to the mindset of a crypto versus a sort of more traditional Silicon Valley investment mindset. But just curious, when you guys are looking for projects, like specifically in terms of Urbit, where you're investing in an ecosystem and whether you're deciding whether to invest in individual companies or address space, how do you evaluate all the systemic complexities where you have a foundation that's trying to coordinate things like core development and how that affects the efforts and the products that all the other companies in the Urbit space are building on, and there's just a lot of give and take there where disruptions in prioritizing certain elements of core development, for instance, could really affect the trajectory of some companies. So there's just a lot of variables and things of that nature, and all the companies aren't necessarily competing with each other, but they're all working to build out their individual pieces of the system that sort of all together make it more valuable. So just wondering how you try to go about weighing all those various moving parts.
Yeah, it's a complex question. We could talk about this for a very long time, especially with respect to Urbit. But generally, I would say, like, my mental model is it would be hard to go to an ecosystem and like make venture investments without, for example, owning the network asset first. So the prerequisite is like, before investing in Ethereum startups, you should own Ethereum, and before investing in Near startups, you should own Near. And I think the same is true of Urbit. So we're at CoinFund, we're there, right? Like, we have Urbit native assets. One disadvantage, though, is like Urbit native assets are very different than other digital assets. And the value accrual of galaxies, stars, and planets is like, it's very complex and questionable, and there's not a lot of liquidity to like kind of empirically show how it works yet. And so that's kind of a blocker for Urbit. And core development is a systemic risk, right? So if there's a startup that's building a product and that product depends on core features and those features aren't there, or they're slow, or they're broken, or they don't work, or whatever, that means that that business has two layers of risk, like the layer of core and the layer of them going to market and creating a successful business on top of it. It's hard enough to make a successful business. Like, you shouldn't have to worry about your base layer, let's say. And so, just very candidly, I think that's an issue for Urbit today, because core is relatively young, and that creates additional risks. And so investors have to take on those risks if they're going to invest in companies.
Yeah, and then layering onto that, I think there's the dynamic of, okay, how do you then de-risk things? Because like ultimately, finance is just a game of buying mispriced risk, and as things are de-risked, then prices go up. And one way to de-risk some of the platform and the core development risk for projects building on top of Urbit is simply to make Urbit, like to unlock more value for Urbit core dev. And so it's, again, I spoke earlier about like, so much has been built on hard mode. What happens if the order of like the capital to Urbit core dev increases by an order of magnitude? And that can happen through just marketing and like fixing the capital market structure. Then all of a sudden, the core risk decreases pretty substantially, because it's not a question of, oh, how much do we have enough capital to solve this? It's just like, do we need to hire more people? Do we need to like, how do we throw more resources at the problem? So it can be de-risked.
All right, so I'm sure you guys get this question a lot, but let's frame this in an Urbit context. So what advice would you give to founders that want to build on Urbit and they need to do their first raise?
Ask the question of, who are my users or developers that will be using this, and why specifically will they need to come here? And that could be because it enables like them to do entirely new things, like Chase, for instance, like some of the stuff he's working on is enabling projects that just would not be possible otherwise. So if you can enable developers to create net new projects, net new capital, yeah, they're going to use it. You're creating value. You can capture that value. It's easier to pitch to raise. If you are then maybe like focusing on users themselves, it's a question of why is a user going to want to use this application outside of the fact that like it's for Urbit. It's like, how do you create something that draws them in? And this is where the financialization, I think, is valuable, because that's one of the things that is really go-to-market for crypto companies at large. It's like the acquisition channel in a way. It doesn't need to be the core product, but it's the acquisition channel. This is a longer tangent, but I very loosely equate it to like Uber giving out free rides. Like it's ridiculous to think that you could build Uber as a ride-sharing network without giving out free rides. And so if you're building things for users, like you need to find a way to do the equivalent go-to-market for crypto-native businesses, which is financialization.
Well, I would say, if you're raising money from venture investors, then you need to think about the size of your business. And then you have to be really thoughtful about like the stage where Urbit is right now. Like, should I be building consumer proximate products, or should I be building infrastructure that other people, to Evan's point, will be building on? And is that a bigger business right now? So you have to sort of like find kind of a business that would make sense for a venture portfolio. And then the secondary problem is an interesting one of like how, like what asset is the investor buying, and how is that asset going to capture value? So, one asset you could sell is private equity of your company. One asset you could sell is digital assets. I think it's actually, it would be like, I think to date, like Urbit companies have been selling equity, but I think it would be much more interesting if they started acting in more of like a crypto native manner and selling tokens. Yeah, I know you like that.
And maybe I'd like layer onto the selling token things just by sharing like how the brain of a VC then works with that. It's like I look at, let's say that I or any crypto investor or like investor that's at least exploring crypto has the opportunity to invest in a token versus equity. And it's like you said earlier, like the mortality rates, the rates of death of companies building equity, so much higher because the way that you sell is via acquisition or IPO. And so you say, okay, look at crypto businesses. If they don't get to the scale where they can IPO, and there have been a small handful that have, then they need to be acquired. I think the largest cash acquisition, it's larger when you include equity, but cash value acquisition of crypto businesses, it's like low 100 millions. And so you start to make the math work and you're like, how does that return a fund all of a sudden? If like, it's very low probability of building to an IPO, very high probability of not making it, and then a medium probability of like a moderate outcome. You contrast that to a token and you're like, okay, with a token, you can pretty much go liquid at Series A equivalent. And so if you're building something of value and then you're tapping into capital markets correctly, like you should be able to build to an $100 million outcome. And so then I look at that and I'm like, oh, if I'm getting in at 10, 15, like if the company makes it to a Series A, I think I can do a 5 to 10x. That's a much different return profile, which makes it so much easier to then raise all of a sudden.
Okay. Thanks, everyone. Sorry.
Let's give it up.
Yeah, let's
for the panel.
please thank the panel.
Jake,